Good morning. This is Chris Robinson, Robinson Ag Marketing. More buying overnight in the corn market. We still couldn't fill the gap by a quarter cent. 432 and a half. The gap gets filled at 432 and three quarters. It's trading at 431 and a half. Very, very frustrating. March corn, if it takes out 449, that'll be a big level. So those are the levels you're looking at. I'm not going to beat a dead horse, but if you can't sell it, you certainly want to hedge it. All right. Now we're going to get back to the meat of the matter. You've got November beans making a new high for the year, kids, 1079 and a half. The previous high, believe it or not, was back in February. February of this year, we traded 75 and three quarters. Okay. Then in June, we traded 74 and a quarter. So here we are this morning. We are above both those highs. This is the highest price we've had since October of 2024. That is a one-year high. So while everybody at CNN and National Public Radio are squealing about the wrong narrative, here we are. We've had a rip your face off rally this month. At the beginning of the month, no beans were at 994, 993 and three quarters. Call it 994. 994 minus 1079. If that's not enough for you to get out of bed, you need to have your head examined. Okay? And if you can't sell into a $1.05 rally, you need to have your head examined, especially at the beginning of the month when you were crying about what you were crying about. When the market gives you opportunities, you have to take it. If you can't sell it, if you're going to store it, for God's sakes, spend a dime, spend 15 cents, lock in some of this profit on paper. If you buy a put, you're not calling a top, you're capturing the revenue. I've been doing this now with farmers and producers for 15 years. Yeah, there's a cost associated with it, but there's a cost associated with everything in life. So if you care about a $1.05 rally, do something to reward it. December wheat trading 531. You know, everybody's watching wheat basically chase this rally. The funds are short. We know they were short 100,000. They got a lot more to go. And I'm sorry, kids, but going from 494 contract low, 492 5-year low to 531, a 40-cent rally after we dropped $1.35 from the June high. Okay, is 40 cents worth something to you? It depends. If you want to capture that rally, 40 cents, don't go out and spend 30 cents on a put. Spend something 10 cents or less. Okay. And if you don't have a broker or a trade executor, which is what I do for my client, I execute the trades, the hedges. If you don't have somebody helping you make these decisions, if you want them, you know, okay, don't pick me if you don't like me, but find someone that you do like that you trust, because when opportunities come like this, you need to get on them. We're going to see if fat cattle stay lower this morning. I'm not going to beat that dead horse. We were down limit in the feeders yesterday. Is there more to go? I don't know. If you're getting my letter, I've got the downside technicals that in markets like these they become self-fulfilling prophecies. And no, they're not perfect, but they give you a good level to look ahead to do what? To make a decision. All right, that's it for the day. That's my coaching speech. If you need some help, give me a call, 312-638-8868. If you're not getting my letter, sign up for it. And also, if you become a subscriber, you'll get access to my weekly private client podcast where I dig deeper into this stuff. Basically, I teach a little class on what I'm looking at, what the technicals I'm looking at, and what hedges we're looking at, and how we're going to adjust them. Have a great day.